Hello, and welcome to Blockchain Byliens. My name is Nicholas Carey, co-founder and vice chairman of Blockchain.com. For this episode, we're excited to host Yves Choueifaty, CEO of TOBAM. TOBAM is a research-driven asset manager whose mission is to provide rational and professional solutions to long-term investors in the context of efficient markets. Notably, TOBAM was the world's first company to launch a Bitcoin open-ended fund. I watched him present at the Paris Blockchain Week. We're in for a real treat today with Yves. Thank you so much for joining us. We have a little tradition around here. We have to ask you your first question, which is, how did you first learn about Bitcoin?
Okay, you will not believe me, I can't remember.
It was that long ago.
I can't really remember. It was probably a press article. Then I read about it again much later on, 6 months later on. And this is when I decided to buy some of them to check how it works, in fact. And I did some research on the internet. At that time, I only found one exchange. It was Mt. Gox.
Mt. Gox, okay.
It was very funny for me, the idea of sending money to Japan, to a guy I would not know, etc. So I was reluctant to do that. So I went to an internet forum, and I took an appointment with a now known person here on the terrace of the Champs-Élysées, I am a guy, I'm extremely strong, but not very impressive. So I took two guys with me that were much more impressive because, it was somebody I did not know that I would have to meet with. I had some banknotes hidden in my socks. And he had a post-it. On his post-it, there was a password. When I was able to access the Bitcoins, I gave him the banknotes. We ordered the beer and we left. And this is how I bought my first coins. And it was really for fun. I thought at that time it was really a gadget.
Yep.
For me, it was an incredibly beautiful object. But it's not because I did not understand at that time that it's precisely because it was beautiful that it would be successful. I thought that, without any person promoting it, without any author, it was a beautiful idea. I liked science fiction. I liked art. So I bought it for the beauty of the art. And it was a gadget. Then a few weeks later, I was in the elevator checking the price of the Bitcoin. And one of my colleagues told me, "You have Bitcoins?" I told him, "Yes." "Do you have Bitcoins?" "Yes." And this is when we realized, at that time in 2016, we were probably 20 people in the company. This is when we realized that 4 of us had Bitcoins out of 20 people, completely by mistake,
Wow. Coincidence.
randomly.
Yeah.
Just because we are mathematicians, because we like this kind of beautiful things, we wanted to experiment it. And this is when we decided to create a monthly dinner around Bitcoin to share knowledge, And because I'm a provocateur, we organize those dinners in a pizzeria, because you know that there is some kind of a specific relations between Bitcoins and pizzas.
There is. A very important one.
And so we kept on laughing, having fun with Bitcoin until 2016. And in 2016, I told my colleagues, "Guys, this is serious. It's not a gadget, in fact. It may be successful. It may work. And we are going to implement a bet." And because I'm an extreme fanatic of William of Ockham, I like to write a one-pager and then summarize it into 20 lines, in 10 lines, in 5 lines, into one sentence, using, Occam's razor.
Yep. Distilling things.
And the result of using the Occam's razor on the bet was that the bet was written that way. We wrote it this way. We wrote it. One day or another, the largest asset managers in the world will propose Bitcoin invested funds to their clients. This was our bet.
Right.
And we implemented this bet 2 ways. First, we bought Bitcoin as much as we could in our holding companies. I put the EdgeCom members of the team under pressure for them to buy Bitcoin as well. I told them, either you have to convince me that I should not buy Bitcoins or you have to buy Bitcoins. You choose. All buying Bitcoins. And then we created a research team dedicated to that. The first mission I gave this team was to write an investment thesis on Bitcoin. So after a couple of months, we wrote a 90-page paper describing exactly what is it that you're buying when you're buying Bitcoin. We presented this thesis to the French regulator, And to my surprise, the French regulator told me, why don't you launch a fund on Bitcoin? I told them we are already running mandates, but we cannot launch a fund. There is this piece of regulation that prevents us from doing that. They told us, yes, you're right, but there is also this article. And if instead of referring to this one, you refer to this one, you could use this one. So I went back to the office, and 2 weeks later, I told them, yes, you have solved the problem, but there is another problem in this article. They told us, refer to this one, then refer to this one. And in November 2017, we were able to launch the first open-ended fund invested in Bitcoin in the world. So we have definitely the most beautiful track records. We exhibit a tracking error of almost exactly zero. We have a correlation of 0.999% to the Bitcoin. And it is by far the longest of those track records.
Yeah, I don't think most people know this story, which is why I was so pleased to discover it, like an old truffle or something that was just special, because every era has sort of new stories that sort of get revealed. And there are some people that have been involved for a long time that I don't think get always the necessary recognition for their convictions. You wrote this 90-page research paper. Now, we won't have time to go through all of it today, and I think it's good to try and summarize some of those things. But if you were to spend time with an asset manager today in 2025, and you wanted them to take 3 or 5 concepts from that research paper and have them think about it, what would they be? Which ones would you sort of recommend?
I would start probably, as any kind of mathematician, with a definition. Let's define what is Bitcoin. The right way to define Bitcoin is like if you wanted to describe what is a car. If you want to define a car, you would probably not explain the concept of entropy. You would not explain thermodynamics. You would say a car is a boat with 4 wheels, a 5th wheel, an accelerator, a brake, a tank, and an engine, and everybody will understand that I'm talking about a car. In the same way, I think there is a misconception about explaining Bitcoin. In order to explain Bitcoin, you don't need to explain the blockchain. You don't need to explain mining. You don't need to explain hashing. In fact, I am incredibly strongly convinced that Bitcoin is exactly the simplest financial asset in the world. You need to understand 5 words to understand what is the Bitcoin. 3 of those words are common between Bitcoin, dollar, and euro, and 2 of them make the originality of what Bitcoin is. The first word is Bitcoin is digital. In the same fashion that most of the euros and most of the dollars are digital, Bitcoin is digital. The second word is Bitcoin is peer-to-peer. The same way that I can give you a $100 banknote, I can send you 100 Satoshis or 100 Bitcoins if I was in a very generous mood, which I'm not today. So first, it's digital, it's peer-to-peer, it's very solid. It's difficult to fade the dollar or to fade the euro. It's really impossible to fade the Bitcoin. And those 3 first words are common characteristics between US, euro, and dollar, euro, and Bitcoin. The fourth characteristic is the first originality of Bitcoin. It's about decentralized governance. The European Central Bank was launched a couple of decades ago, and in the bylaws of the European Central Bank, they wrote that this European Central Bank has only one mission: stability of prices. Only one mission, no other mission: stability of prices in euro. Then one day, the board of the ECB gathered, and they decided, after all, not stability of prices, let's make it stability of inflation, which is not exactly the same, as you can imagine.
No.
The bylaws of the ECB made it that the ECB was forbidden to lend money to governments in the Eurozone. Can you imagine? It's forbidden. And one day the board decided to meet, and after the board meeting, it was decided that after all, the ECB would not have anything in its reserve apart from government bonds. So in fact, there is a book which is incredibly interesting to read. It's a book by Friedrich von Hayek. It's called Denationalization of Money. And the thesis of Friedrich Hayek, it is that as soon as a group of people are provided with a monopoly of money printing, one day or another they're going to abuse the monopoly. Voilà. And in fact, One way to solve the problem is to make it that the governance is decentralized. And it is so well decentralized that, in fact, it's virtually impossible to change the bylaws of the Bitcoin. The bylaws of the Bitcoin, it's the algorithm. The algorithm is stored in tens of thousands of nodes of the Bitcoin network. And in order for the algorithm to really change, I'm not talking about small variations, but to really change in terms of principles, for it not to be in a way regressive, you need all of the nodes to change the algorithm. It's a consensus that needs to emerge. And if this consensus does not emerge, the Bitcoin bylaws are not going to change. And the fifth characteristic of the Bitcoin, it is that forever, there will never be more than 21 million Bitcoin, when in fact, the maximum quantity of dollar or the maximum quantity of euro is in fact infinite. So digital, solid, peer-to-peer, decentralized governance, 21 million. And if you have understood that, you know what is the Bitcoin. And all the rest is technicalities.
Yep.
So the Bitcoin is really the simplest financial asset in the world. And this is the way we should teach about the Bitcoin, not about the blockchain, etc., etc. This is what it aims, this is the mission statement, this is a social proposal of Bitcoin.
Thank you for explaining that so elegantly. I think it's helpful because Bitcoin, for some reason, sort of combined everything many people didn't understand about computers with a lot of things they don't understand about money. And actually, when you go through it the way you described, it's digital, it's peer-to-peer, just like the pounds, euros, or dollars you're used to. It's, counterfeit resistant, much better counterfeit resistancy than even cash. And then the sufficiently decentralized aspect is huge in the history of
decentralized
mankind.
In terms of governance, this is what matters. Not decentralized in terms of holdings. It's decentralized in terms of governance.
Which means, it can't be modified or changed, and they can't decide to make more of the most interesting aspect of it, which is its scarcity. There's always sort of a debate in the digital currency space now, which was Bitcoin pioneered essentially a completely more elegant and future-proofed version of money for the world. There are also more digital assets now. How do you at TOBAM think about that as a firm? Do you just stay with Bitcoin? Do you look at other assets? I get this question from institutional investors fairly regularly, where they start to believe the Bitcoin thesis, but then I think they're sort of sometimes led astray or very fairly, quite suspicious of other digital currencies.
There has been a lot of fighting at TOBAM when we discovered, of course, Ethereum and all of the others. As for myself, the maximum amount I had of non-Bitcoin assets in my crypto portfolio was 0.5%. So the minimum amount was 99.5% of Bitcoin. So I was always very much convinced with Bitcoin. We wrote the investment thesis of Ethereum. And as much as we believe that the investment thesis of Bitcoin is extremely strong, it's difficult to find an investment thesis which is as weak as the investment thesis of Ethereum. So I am very much convinced that I need 10 minutes to convince you mathematically that the price of Ethereum will go to zero one day or another. It's almost math. It's a thesis which is written, which would take probably more than 5 minutes to explain. But I can give you some intuitions. The first intuition, it is that I needed 5 words to define what is Bitcoin.
You need at least 5 minutes for Ethereum.
I challenge anybody to find the 5 words that for somebody which is not familiar with the question to understand the value proposal of Ethereum. The value proposal of Bitcoin is 5 words. The value proposal of Ethereum is much more difficult to explain. The second thing, it is that the most easy analogy that I find with Ethereum is internet in 1997. Imagine I lend you my time machine and you go to 1997 and you know that internet is a good idea. Which asset will you buy to take advantage of this idea? At that time in 1997, there were about 10 IPOs a week in the Paris Stock Exchange.
Wow.
To list a company that claimed they would take advantage of internet. Not one of those companies survived. It is the same, by the way, in the US. America Online did not survive. Yahoo is ridiculous. And all of the others died. The only one that survives among thousands of them is Amazon. It was a website that was selling books online when nobody buys books anymore. So the of buying this one precisely is extremely small. In fact, I am absolutely sure that tokenization, DeFi, smart contracts represent exactly the future of finance. But this is a technology. This is not an asset. I was talking about an investment thesis. I was not talking about a technology thesis. The tech thesis, I am with it 100%. You know, I've spent my life in finance, and I know very well that tokenization, that DeFi, that smart contracts are the future of finance. I am absolutely sure that the worst way to take advantage of that is to buy Ethereum. Another intuition is the following. What is the real problem with the euro and the dollar? The real problem with the euro and dollar is centralization, is the fact that central banks are central. So the remedy for that is decentralization. What is the problem with the financial system that Ethereum is trying to solve? It's not centralization. It's the fact that you cannot trade peer-to-peer. It is the fact that if I want to sell a share of Apple and you want to buy it yourself, we have counted the number of intermediaries that there exist between you and me. There is about 14 intermediaries between you and me for this trade to happen. So it's impossible for us to trade peer-to-peer in the financial markets today. And the gigantic proposal of Ethereum and of all of the others is for us to be able to trade in a peer-to-peer fashion, which is 24 hours a day, which is 7 days a week, which is from Tokyo, from Paris, from New York, or Timbuktu, without any kind of difference, which is to trade $100 or $100 million at the same price, at the same condition, which is to avoid completely the legal risk. What is legal risk? Legal risk is an ambiguity in a contract. What is the fact that a contract is not going to be respected? If the contract is an algorithm, there is no ambiguity and there is no force on the earth that will prevent the execution of a contract. So the main advantage of Ethereum is the fact that it's peer-to-peer. The problem of Ethereum that it is that they claim to be decentralized. When there are no advantage to that in this precise use case, and in fact it is extremely costly to mimic decentralization, which is wrong in fact because Ethereum cannot be decentralized. Ethereum, it's not like Bitcoin. Bitcoin is very inert. Ethereum needs to live. There is a reform of internet every week, every month, every quarter, every year. One day they are proof of work, proof of stake, inflationary, non-inflationary. There are so many versions of it. So it's a corporation, in fact.
Yeah, fallacies of changing perspectives and political views and.
But yeah. Any corporation need to adapt the tool that they are marketing, etc. But it's not decentralized. The corporation is not decentralized, and Ethereum, in fact, should be a corporation which is proposing a platform, a generalized platform of trading, of finance across the world, which is permissionless, which is peer-to-peer, etc., but which should be, in fact, we should accept the fact it's centralized. So, but we are going away from Bitcoin. So this was the other thing, of course, it is that in order to improve Bitcoin, it's very important that you realize that in order to improve Bitcoin, you need to simplify it. You don't need to make it more complex. You remember those 5 names, the 5 words I used? In order to improve Bitcoin, you need to remove one of the words, not to add one of them. This is also the fact that I am a fanatic of William of Ockham. I have understood that in order to make something better, you need to simplify it. Not to make it
in its most elegant form. Yeah. Voilà. So we've seen a potential new actor, I would say, in the allocator space, and that's the nation state itself. El Salvador is acquiring coin with their own treasury. The United States has, under the current administration's guidance, set out potentially the pathway for a digital asset strategic reserve or a Bitcoin strategic reserve. So far, that looks like they're just going to hold on to things they've already confiscated. Do you hear anything like this happening for Europe? Do you think this is a concerning centralization risk longer term, or is this a welcome actor? What's your perspective around nation states?
The easiest answer you pronounce a word which is decentralization. In my mind, Bitcoin is not decentralized. Bitcoin's governance is decentralized. And this is very important. The fact that Bitcoins are owned through ETFs, through MicroStrategy, or even through states, I have to say, quite indifferent about that.
Yep. Okay.
Bitcoin is not proof of stake, so it's not the one who owns most of it who will decide anyway. Okay? So there are some other problems for concentrations, but it's not a problem of governance. So I think that the robustness, the solidity of the Bitcoin will not be affected by the fact that the holding of the Bitcoin is centralized or not. This is a high-level answer to your question about decentralization. Now you mentioned another thing. You mentioned about Europe. I have to say, I have to confess that I'm not extremely optimistic about Europe. And, after thinking a lot about it, I would describe my thought this way. I would say that there is a difference of approach between the US and Europe in which regards, any kind of disruptive technology. There is a human reflex, which is that when you are exposed to a disruptive technology, you could look at it from the angle good and evil. And unfortunately, Europe, they look at things and wonder, is it good or evil? In the US, this step will be mandatory, but it will not last as long as in Europe. In the US, very quickly, they will migrate to another point of view, which is a point of view, or does it work or not? Take advantage of it. I want to earn profits out of that. I want to, the question of whether Bitcoin is good or evil is as clever as a question of whether a knife is good or evil. To answer this question, it's not relevant. Technology has nothing to do with good and evil.
Right. It's the actions and the behaviors of the humans.
Exactly. So you have to check whether it works or not. And if it works, you should use it in a way which is profitable in a sustainable fashion.
Yeah.
And this is really what, in fact, prevents Europe from having large banks, because it has been decided that finance is evil. This is what has prevented you investing in internet, because internet is evil, because crypto is evil, because, it's normal to look at it from the good, and it's a human psychology thing. And because it's very important to understand that any kind of disruptive technology is violent by nature, because it will change the world. And the world as we know it has advantages. It works and we know it. And this is why any kind of, disruptive technology is always fought with anger in the beginning. Unfortunately, we should try to avoid being stuck in that. And in Europe, because we try to regulate at first glance, we are in a way frozen in this approach of good and evil. We want to control, we want to regulate, when in fact we should leave freedom, enterprise, market, try different use case, and then we regulate when it's needed. It's very important to understand that regulation is a necessary evil.
A different kind. Yeah, okay. Thank you. I think that makes a lot of sense, and it's something I've witnessed over the last decade as well. I would say there was general curiosity among European regulators, but this question around good and evil, or trepidation to meaningfully move forward, adopt, sort of lead, has been very, very problematic from an adoption perspective. And it's let other parts of the world speed up and thrive in an area where, frankly, like Bitcoin had a very strong, thriving community in Europe.
First, Bitcoin fund is French. The oldest exchange in the world is Paymium. It's French. It was founded by a guy which was, corresponding with Satoshi. It's a very old exchange that was never hacked, but it's becoming very, very, very small when compared to others. With regards to the idea of state accumulating Bitcoin, let me
let's
give
think
you
about
some
that.
Thoughts. In the 18th and 19th centuries, there were a series of companies in France and England, specifically, which invented new business model which consisted into accumulated gold. One of those companies became the Banque de France, and the other one became the Bank of England.
Yeah, Midlands Bank first.
So let's imagine that some entities, whether they are states or whether they are private companies, and Banque de France or Bank of England were private companies. When Friedrich Hayek mentions about denationalization of money, He is in fact reminding us that money state has nothing to do with money. When the money of the world was gold, it was not the governments that were issuing gold. The only way meddle with currency is to fake currency. It is what the Roman Empire did with, in the beginning it was 4 grams a coin. For centuries and for centuries it was 4 grams of silver per coin. And then they began cheating.
Yeah.
And the name of that is called seigneuriage, which mentioned that it's in fact only the ruler that can cheat, but it is allowed for him to cheat. In fact, if you imagine some entities accumulate in bitcoins today, whether it is in the US government, whether it is Bhutan, whether it is El Salvador, or whether it is MicroStrategy. Let's try to imagine a few decades later, a few years later, what those companies will become. In my mind, a possibility is that MicroStrategy becomes a world bank.
Ah, interesting.
If they accumulate Bitcoin, and one day or another, the central thesis of TOBAM becomes true, which is that the Bitcoin will become the standard measurement of value. In fact, people will exchange bonds issued by MicroStrategy that are backed by the Bitcoin, and this could be a very beautiful currency.
Yeah. So
imagine MicroStrategy issuing tokenized bonds and having a gigantic collection of, a quantity of wealth, which are, stored in the format of Bitcoins. MicroStrategy becomes a very, very powerful financial institution.
Right. That's like hyper Bitcoinization and a world where Bitcoin becomes the world's strategic reserve asset.
Absolutely, it's a standard measurement of value. You mentioned to me earlier about the story of money.
Yeah, the history of money.
The first standard way of measuring money were probably a long time ago the stone arrowheads of our ancestors.
A small weapon.
Before agriculture, much before agriculture, when you had 4 stone arrowheads in the pockets of your jeans, you could exchange 2 of them against an iPad. If you wanted the iPad, you could exchange. Why? Because those stone arrowheads were difficult to manufacture.
Sure.
Then,
scarce and useful.
Yeah, because it's difficult to manufacture, in fact, in a way. Not useful, scarce. Scarce and adopted. It's very important not to confuse with useful. Usefulness is a characteristic of Ethereum. It's not a characteristic of Bitcoin. It's like gold. Gold and oil. Gold is not useful. This is why gold could be used as a currency, and this is why oil cannot be used as a currency. As soon as there is an industrial usage, the industrial usage pollutes the storage of value mission. So it's something which is effectively can't be used except for a storage of value, like the dollar. A dollar, you cannot do anything with a $100 banknote, apart try to store value in it. Okay? So in the beginning, it was stone arrowheads. Then, because of technology, it became easier to manufacture. So we needed to change standard. We went to agricultural goods. And today, you still have some tribes in Kenya that use the number of cows to estimate the values of things.
Sure.
Then when agricultural goods became easier to produce, we went to iron, then we went to brass, then we went to silver, then we went to gold. And what is very important to understand it is that as soon as the users have the impression that the standard is more and more easy to produce, you need to change the standard. And this is the problem with all the standard way of storage of value of the past. It is that one day or another, they became abundant.
Right.
And what Milton Friedman said, inflation has nothing to do with the rise of price. Inflation is only an increased abundance of money, of currency.
Supply of money. Yep.
Yeah.
That's an excellent historical reminder for the history of money and how we've gotten to this moment with digital currencies and all of the lessons that we've learned in history caused by humans and debasement and technology, and very, very interesting for you to share those with us. All right, well, we're coming up to the end here. I thought I'd give you an opportunity to maybe leave us with some parting thoughts. There's more, I would say, economic actors today that are interested in holding or acquiring Bitcoin than at any point in time. How should they be thinking about, this journey? What's the next decade hold? And how do you talk to potential clients about the offering that you have?
I think the challenge in the last decade was really to be convinced and to convince other people to hold Bitcoin. I think the next challenge is going to be about implementation. How to make sure not only you're exposed to Bitcoin, but your exposure is efficient. I think there is a pioneer in that field, Michael Saylor, which has really created another way to get exposed to Bitcoin. When somebody is successful and the reason of his success is relatively complex, there are plenty of urban legends that, appear across the world. I think it's very important to look at what Michael Saylor has achieved in a scientific fashion. This is what we have done at TOBAM. We published a paper about that in March of this year, a paper called really about deciphering the performance of MicroStrategy, saying that it's not a question of leverage. There is almost no leverage in MicroStrategy. He has only 8 billion of debt when compared to 100 billion of market cap. It's not a question of leverage. It's not a question of premium. The MicroStrategy outperforms the Bitcoin even when the premium goes down. And this can be completely mathematically deciphered, decoded. And I think it's a very clever way to look about more, efficient way to build an exposure to Bitcoin. There are now a few entities across the world that have completely understood what this genius and incredibly transparent guy, which is Michael Saylor, has achieved. And I think it's really probably the next challenge, which is not only hold Bitcoins, but get a Bitcoin yield. Make sure that you have more and more Bitcoin per unit originally invested.
And you expect other firms to start to mimic or adopt?
It has begun. You have a firm in Japan, you have a firm in France, which is incredibly successful, which is also very encouraging. It is that there is a premium for emerging actors in that field. And when you are MicroStrategy, you are going to outperform Bitcoin, but it's very likely that when you are an emerging actor, you're going to also outperform MicroStrategy.
Well, we'll be watching it with very keen interest. Thank you for breaking that down for us. So, Yves, thank you so much for spending some time with us, and congratulations, on being first and being mimicked. I think is a high form of flattery. Michael Saylor could probably be thanking you. So with that, we'll be very grateful for anyone who's listening to rate our episode, share this with other folks, and on behalf of the entire Blockchain.com team, thank you very much for tuning in.